Hi there, ladies and gentlemen, and welcome to this episode of Buy, Hold, Sell, where we're going to be talking about companies with massive growth runways. I'm joined today by James Sindus from Munro Partners and Vihari Ross from Antipodes. Welcome, ladies and gentlemen, I should say. Thank you very much for joining us.
Thank you, James.
All right, we're talking about runways. Our first stock today is Airbus. Vihari, buy, hold, or a sell?
This is a buy. I'm continuing on the pun theme. This is going to take off. The profitability of this business could double to triple over the next few years. This is a business that has the infrastructure layer built for a huge ramp in aeroplane deliveries, which were constrained by Boeing taking a nosedive, as well as COVID supply constraints. And there's a nice structural tailwind sitting behind this. 4 billion additional passenger journeys over the next 20 years, unlocking of new routes, and also the replacement cycle of planes. Very much a buy.
James, Airbus, it's in an industry where there's not a lot of competitors, tough to get in there. It's got a strong position. Buy, hold, or a sell?
Hold. Love the industry, but we actually prefer, on the civil side, the engine makers, and on the defence side, we actually just prefer companies in Europe on the defence side because of Ukraine. So that's our sort of aerospace and defence exposure.
Okay, we're going to change tack. We're going to go to payments. Visa, it's probably in most people's wallet somewhere. Yep. Buy, hold, or a sell?
Definitely a buy. Great network effects in those businesses, both Visa and MasterCard. Any disruptive threat over the last decade's been well and truly put to bed. When you think about things like Apple Pay, it was going to take over, but in the end they end up becoming a partner with Visa and MasterCard because they connect to your credit cards. So that actually just ended up helping Visa, MasterCard because it increased the amount of acceptance and also the amount of use of your credit card. So yeah, great network effect businesses. Still buys even after all these years.
Okay, Vihari, it's had a great 12 months. Visa, the newcomers, but Visa has led the charge. Buy, hold, or a sell?
I'm a sell on this one. I think this is a stock trading at 35 times. Its growth profile used to be that 10 to 15% per annum, but the transition from cash tailwind is kind of done. The e-commerce tailwind is kind of done. Looking forward, it's growing probably more at 9% than that 15%. And we see better value elsewhere. You've got companies like Wise, just digital native, cross-border remittance business, trading, similar multiples, slightly lower multiples, but with a really big growth runway sitting behind it.
Okay, let's go US tech. Microsoft, third largest company in the world. Buy, hold, or sell?
This is a hold for us. It's in our portfolios. It's a stock that clearly, is a cloud transition winner. Obviously, transition to the cloud is super important in order to, interrogate your own data with AI technology. Clearly, an AI beneficiary as well. That CapEx cycle has been, very much in focus in the last 6 months, but as a result, it sort of ended up being a bit of a laggard. But those long-term tailwinds remain, including a very tangible monetization pathway for its AI investments, which can't be said of all of the players in the space.
Okay, it's a competitive space. Microsoft, buy, hold, or a sell?
Buy. Valuation, it's not optically cheap at like in high 20s PE, but it's still growing in the teens. As Vihari said, it's in everyone's desktop. So great opportunity to obviously sell its AI tools through that installed user base. Still a buy.
Okay, we're going to change tacks here. We're going to go for Costco, which doesn't sound like a particularly exciting business. It's one of those mega supermarkets where you can get just about everything. Yeah. Buy, hold, or a sell?
Hold on this one. I love Costco, executive member myself, been there many times to buy detergent and walked out with a canoe or something. But unfortunately it trades at 50 times earnings. Great business, very defensive. No one can underprice it or undercut it on price. So, continue to grind up at 8% growth per annum. But 50 times earnings just too full for us. So unfortunately we had to move on from it a couple of years back.
Okay, too expensive for James. Buy, hold, or a sell for you?
Yeah, look, this is a sell for me. This is a stock I've covered for many, many years, and all my years in global equities. I have no beef. I'm surprised you haven't bought some on your Costco visits. With the quality of the business, it has an exceptional value proposition to its member base. It has a slow, durable growth profile. It has all of those things. It has a negative working capital position. But this is about, what are you paying for it and what are you getting in return? And that just is not a good deal at 55 times for Costco right now.
Folks, I've asked our guests to bring along a stock that they think meets our criteria of having a massive growth runway. We're talking about companies with sustainable competitive advantages, good returns on capital, strong balance sheets, disruption resistant. James, I'm going to kick it off with you. What's your pick?
I'm going to go with Formula One.
Okay.
Growing fan base, obviously with the Netflix Drive to Survive series, getting into the US with 3 races now. Very attractive demographic, so a younger demographic, more female, more affluent, so very valuable to advertisers and also for TV rights. You'll probably see a streamer come in for the next round of TV rights bids. Obviously also race promotion, demand for live experiences going up. Hopefully we keep the race in Melbourne and you don't pinch it up here in Sydney, but you will expect a step up in those contracts as those cities roll through those contracts. So great for the earnings profile for Formula One.
Okay, race cars for James. Bahari, what's your pick?
I'm going to go to the tech space with Tencent. Obviously, many of our listeners will be familiar with that, Chinese tech name. I think there's been so much exuberance with that opportunity in American technology companies, and we have a Chinese tech company which is actually given their data sets, given their locked-in user base, has a real opportunity to benefit from the AI deployment within their network. They have 1.4 billion monthly active users on Weixin, and they also have their fintech business. It's a rapid grower in both those components, regardless of what's going on in the broader Chinese economy. And they're a business that is also generating high returns on capital and buying back stock. So it has all of the sort of tenets that of quality that investors should be looking for, but at a fraction of the multiple at 18 times. And that's after this recent China rally. Before that, it was at 13.5 times.
Well, ladies and gentlemen, I hope there's a few ideas in there on some of these companies with big growth runways. Remember, check out our video content on our YouTube channel. We've got fresh shows like this dropping every week.